I do think in general that the Asian markets picked up on this slowing global trade trend 6 months before it occurred. And it occurred in the fourth quarter. It was particularly pronounced in November and December. There's a likelihood that there was orders ahead of projected tariffs, and then you saw a slump in November and December. You'll probably see something of a rebound in January, if only to get ahead of the Chinese New Year holidays at the beginning of February. Nonetheless, the broader trend is that global trade is slowing to a level much closer to global GDP, unlike the prior business cycle, and that main trajectory is going to be with us through the course of the year. There's a whole host of reasons for it. The new business model that most major corporations will try and move towards over time is to manufacture where final demand is. So that's where the trend is going. But nonetheless, as the numbers come through, it's not shocking that the market would react negatively, at least in the short term.
We should mention we're at session lows. That's down over 450 points for the Dow. S&P's down 2%. Rick, when we look at the data in this balance of who's hurting more from the trade war, I guess existing home sales suggest the U.S. might be playing catch up to the downside, catch down, as it were, to the pressure the Chinese economy is feeling.
Well, we definitely lost the 5 million handle on existing home sales, down almost 6.5%. So I see where you're going. But then again, autos, housing, cyclical, there's a lot of issues there that I think transcend some of the global slowdown that we've been discussing. I continue to like to use the UK as kind of a canary in the coal mine, so to speak. You figure, first of all, many people on this trading floor are wondering if Brexit will go better than our partial shutdown. Will we get the deal done with China before we open the government? So I'm looking at all the weak links. And the pound versus the dollar, you know, it's hovering at 130, very close to 130, basically the best level since the first half of November. But more important, if you look at the euro versus the pound, the euro's at the weakest since mid-November, around 87.5. The reason I bring these things up, you know, if Europe can't hold on to its relationship with regard to its currency with the Brits, I think that gives you a good glimpse of how Mario Draghi's going to sound this Thursday. So in the grand scheme of things, it's going to be difficult, especially with the partial closure in the U.S., no data coming in, for the U.S. to kind of hold off on its own and continue to do better. So I would think that the pressure, the gravity of the global slowing is going to have a bigger and bigger toll in the sessions ahead for U.S. markets.